Attention, your wallet is under attack right now, not tomorrow, not someday, right now, and the weapon being used against you fits inside your pocket and has a rewards program. Most people think the biggest threat to their financial future is not earning enough money. Wrong. The real threat is sitting in your wallet collecting points while quietly draining your wealth, one compounding interest cycle at a time. Credit cards are not the enemy. Let me be clear about that. Used correctly, they are one of the most powerful financial tools available to any soldier in the field. But here is the brutal truth. The banks did not design these products for your benefit. They designed them for theirs. And the gap between how most people think credit cards work and how they actually work, that gap is worth billions of dollars to the financial industry every single year. Billions, with a B. And most of it comes directly out of the pockets of people who thought they were being smart. Today's enemy has a rewards program. Today's enemy offers you cash back. Today's enemy sends you birthday emails and calls you a valued customer. Today's enemy is the credit card ambush. Now, before I break this down, I need you to understand something. Credit card companies are not stupid. They are not careless. They are not accidentally profitable. They are brilliant. The modern credit card is one of the most sophisticated wealth extraction instruments ever engineered. Every single feature, every single policy, every single piece of fine print was designed by rooms full of behavioral psychologists, data scientists, and financial engineers whose entire job is to understand exactly how human beings make decisions and then structure products that exploit those decisions at scale. The minimum payment, the grace period, the promotional rate, the credit limit increase, the rewards program. None of these features exist to help you. They exist to keep you engaged, keep you spending, and keep you carrying a balance. And the worst part of this trap? Most people do not discover it until it has already cost them thousands. Let me show you exactly how it works. Meet Private Grasshopper, fresh out of college, first real job, feeling financially independent for the first time in their life. The bank sends them a credit card offer in the mail. 0% interest for the first 12 months. 2% cash back on all purchases. No annual fee. Sounds like a win, right? Recruit signs up. Uses the card responsibly at first. Groceries, gas, a few dinners out. Pays the balance in full every month. Then something happens. Car breaks down. Unexpected expense. Balance goes to $2,000. No problem, they think. I will pay it off over the next few months. Except the 12-month 0% promotional period ends, and the rate jumps to 24.99%. Not gradually, overnight. That $2,000 balance is now accruing nearly $42 in interest every single month just to exist. And here is where the ambush truly springs. The minimum payment on a $2,000 balance at 24.99% is roughly $50 a month. Sounds manageable, right? Pay $50 a month and stay current. But here is what the bank is not putting in the brochure. At $50 a month minimum payments, it will take over 5 years to pay off that $2,000 balance. And by the time it is paid off, the recruit will have paid nearly $1,000 in interest alone on a $2,000 balance. They borrowed $2,000 and paid back $3,000 for a car repair. And that is just one card, one balance, one ambush. The average American household carries over $6,000 in credit card debt across multiple cards. Multiple interest rates, multiple minimum payment traps, all running simultaneously. This is not bad luck. This is the ambush working exactly as designed. Let me make this even more real, because I want the numbers to hit you like a full field pack on a 10-mile march. Recruit carries a $5,000 credit card balance at 24.99% interest. Scenario 1. They pay the minimum payment every month, roughly $125 a month. How long does it take to pay off? Over 4.5 years. Total interest paid? Nearly $2,000. They borrowed $5,000. They paid back almost $7,000. Scenario 2. Same $5,000 balance. Same 24.99% interest rate. But instead of minimum payments, they pay $300 a month. A real aggressive payment. Paid off in under 2 years. Total interest paid? Around $800. Same debt. Same interest rate. Different payment strategy. Difference in interest paid? Over $1,200. That $1,200 is not a small number, Grasshopper. That is a month of rent. That is a car payment. That is months of index fund contributions compounding toward your future. But wait, it gets worse. Because while Recruit is dutifully making minimum payments on that $5,000 balance, they're also still using the card. Small purchases here and there, nothing crazy, just everyday spending. And every new purchase on a card carrying a balance immediately starts accruing interest at 24.99%. There is no grace period when you're carrying a balance. That free interest window, gone the moment you don't pay in full. So the balance never actually goes down. It just moves around, grows slightly, shrinks slightly, lives permanently in the ambush zone. That is not debt management. That is a subscription to the bank's revenue model. Enough about the ambush. Let me give you the survival strategy. 3 moves. Execute all 3. Counter move 1. Know your real numbers. Not the balance. Not the minimum payment. The actual total cost of carrying that debt. Go to every credit card account you have right now. Find the interest rate. Find the current balance. Then find something called the interest charge on your statement. That is what carrying that balance is actually costing you every single month in real dollars. Most people have never looked at that number. The banks are counting on that. Because the moment you see exactly how much money is evaporating from your wallet monthly in interest charges, the entire calculation of whether to carry that balance changes completely. Know your numbers. That is the first counter move. Counter move 2. Attack the highest rate first. You have heard me talk about the avalanche method before. Same principle applies here. List every credit card balance you carry from highest interest rate to lowest. Minimum payments on everything. Every single extra dollar you can find goes to the highest rate card first. When that one is eliminated, you roll that entire payment into the next one. Do not negotiate with the enemy. Do not make partial peace with high interest debt. Eliminate it, card by card, rate by rate, until every balance is at 0. This is not optional. This is the mission. Counter move 3. Understand the grace period and use it like a weapon. Here is the intel most people never receive. When you pay your credit card balance in full every month, you pay 0 interest. None. The grace period protects you completely. That means a credit card used correctly is essentially a free short-term loan with rewards attached. Free flight miles, cashback, purchase protection, extended warranties, all free because you pay the balance in full every month and the bank collects nothing from you in interest. The bank makes a small fee from the merchant every time you swipe, but they make nothing from you directly. That is the correct way to operate in enemy territory. Take the rewards, give nothing back. But the moment you carry a balance, that grace period disappears. The rewards become irrelevant. The cashback becomes a rounding error compared to the interest you are paying. And the bank transitions you from a mildly annoying customer they make little money from to a highly profitable revenue stream they will work very hard to keep. Know which customer you are. Be the annoying one. And one more thing before I move on. If you are carrying high-interest credit card debt right now, call your card issuer and ask for a rate reduction. Just ask. You would be surprised how often they say yes for customers in good standing. A single phone call taking 5 minutes could reduce your interest rate by several percentage points. That call costs you nothing. Not making it could cost you thousands. Let me leave you with this, Grasshopper. The credit card is not evil. Fire is not evil. But hand fire to someone who does not understand it, and they will burn their house down. Credit cards are fire. Used with discipline and full understanding, they are one of the most powerful financial tools available. Used carelessly or without understanding the mechanics, they are the single most effective wealth destruction instrument most civilians will ever voluntarily hand to their own enemy. The banks did not build this ambush to hurt you personally. They built it because it works, because human psychology is predictable, because the gap between how credit feels and how credit actually works is enormous, and that gap is where billions of dollars of profit live. You now know how the ambush works. You know the minimum payment trap. You know the grace period mechanics. You know the avalanche method. You know how to ask for a rate reduction. You know which customer to be. The only question now is the same question it always is. Are you going to use this briefing, or are you going to let it collect dust next to that passive income course? Financial discipline is what separates those in debt from the ones that actually build wealth. You think the credit card ambush is sophisticated? Next week, we're going to talk about the car loan ambush. The trap that's quietly destroying the middle class, one monthly payment at a time. And the numbers we're going to go through, let us just say the dealership is not your friend either. Make sure to follow me for more of Sarge's money secrets. See you on the battlefield. Fall out.